In today's video, we're going to discuss shorting a low float stock without blowing up your trading account, so stick around. I'm Steven Spencer. I'm a partner at SMB Capital. We're a prop trading firm in New York City where we trade futures, stocks, and options. And in this video, I want to help you understand certain type of trading in what we call low float stocks and how to approach it in a logical, low risk fashion to take advantage of one of the more common trading patterns that we see. So before we get into the actual details of the trade, let's discuss for a couple of minutes what actually low float stocks are, because I'm sure there's some of you who aren't familiar with that terminology. A low float stock, as I define it, is a stock that has less than 10 million shares available to trade publicly. There is a sweet spot in low float stocks, and that's about 5 million shares. And so the reason why low float stocks can be so good for short-term traders to trade is a lot of the large institutions are not involved in these stocks. So you don't have large market players with algorithmic HFTs involved, and you're really just trading. It's basically prop traders versus retail traders going back and forth and trading these stocks against each other based on their trading skill. And so that's one of our favorite types of stocks to be trading, because we believe over the long run, the skills that our traders develop are going to be better than most of the other market participants, individual market participants. So when you have 5 million share float, generally the larger brokerage firms are going to have shares available for you to locate, and so you'll be able to trade those stocks on the short side. And when we're trading stocks, as short-term traders, we want to be able to trade both on the long and on the short side, so it's important to be able to locate shares. One of the red flags I look for is if a low float stock has under 1 million shares available to trade, that can lead to very erratic trading patterns. And again, these are just general rules. It could have 1.3 million shares available to trade in the float, and that still is going to be pretty erratic. But once you get up to 4 or 5 million shares, usually you can get that volatility. Let me explain to you a little bit why these low float stocks can have such good volatility. So you have a stock with 5 million shares outstanding. A lot of times, the reason there's so few shares outstanding is this was a stock that previously had 50 million or 100 million shares, and it traded down from 20 to 10 to $1, maybe even to 50 cents. And to avoid getting delisted, they'll have like a 10-for-1 reverse stock split or a 20-for-1 reverse stock split. And so if you have 50 million shares outstanding and your stock is down to 50 cents, and you do a 10-for-1 reverse stock split, the price goes up to $5, but the float goes down from 50 million to 5 million. And so that's why we have these lower price stocks after the reverse stock split. When you have a $5 stock with 5 million shares outstanding, that's a $25 million market capitalization. Many of the senior traders on our desk will have $20 or $30 million in buying power. So in theory, they could control the entire float of that stock. And so if a senior trader on our desk can control the entire float of the stock, I know there's dozens, if not hundreds of retail traders, larger retail traders, who could do the same. And so when you have a stock that either a small group of traders or even an individual trader can control a large percentage of the float, those stocks can be pushed up or down significantly based on them putting on larger position sizes, whether they be piling in on the short side or piling in on the long side. So before we zoom in and take a look at the charts and the morning game plan and the statistics related to this particular trade, I wanted to remind you that we have a 2-hour free workshop. We teach 3 of the lowest risk, highest reward trading setups that are most commonly traded on our desk here in New York City. Click on the link above and you will be taught those trading setups. In addition, the number one thing that influences or has the largest determination of your profitability as a short-term trader is being in the correct stocks. And in that 2-hour free workshop, I will spend 30 minutes teaching proper stock selection, where you're going to be able to identify the most liquid and volatile trading names. And you can see that, sign up for that workshop at tradingworkshop.com. Okay, so the stock we're going to talk about today is MBOT, and this stock did a reverse stock split, which I had mentioned previously when we were discussing low floats, And so that brought the price back up from very low to actually tradable prices again. And another thing to remember is when these stocks do the reverse stock split and they can get over $5, then they become marginable again. And that makes it easier for retail traders to put on larger positions in their accounts. So $5 is also quite often a key price, both on the support side when it's going down and also when it gets back above $5 in terms of creating momentum in either direction. So if we look at the daily chart here for the last couple of years in MBOT, what you can see is at the beginning on the left side, the stock had been above $20 a couple times, double topped, then trended all the way down to the low single digits, maybe even like down to $1. So at the beginning of 2019, some news came out, some press release, doesn't really matter for our purposes what it was, but the stock gapped up to about $4 a share, and then over the course of, looks like a day or two, spiked up to $18 or $19, then trended down over the next few months all the way back down to $4. And for the last, I guess, 4 or 5 months, has really just been moving sideways between $4 and $6 until the last few days. Another catalyst came out, the stock kind of gapped up. If we take a look at the 3-day chart, what we can see is here, the news came out on day one, the stock started to move up from $6 a share, got up to $8, moved sideways, and then at the end of the day, spiked up to about $12. So we're coming in on day two. The stock has already moved from 6 to the double digits, and we know that in the pre-market it had been up about $13 a share. And so we have these, on this chart we're looking at right here, I have the longer term potential resistance areas based on where it spiked to at the beginning of the year. So on day two, I should say on day one, when something starts to move up like that, your focus is on the long side, because most times on one of these low floats when they have a catalyst, they'll close at or near the high on day one as long as they take out the morning high. And then on day two, they'll either kind of blow through the day one high and have another up leg, or either fail right on the open at the day one kind of high or pre-market high and then start to come in. In this case, on day two, it took out the pre-market high and went up to those longer term resistance levels from day two, came down from 19 to 15, kind of closed in the middle of the range. And then this morning was day three, and they actually were offering a private placement at $10.50 per share, around 900,000 shares. So the stock was gapping down from around 15 to 13 in the pre-market. If we zoom in, I've marked up a chart for you showing you kind of what the stock was doing in the pre-market. They were selling it at 13.5. It had been down at 12.5, went back up to 13.5. And as the market opened, we were basically going to look to see if it could spike above 13.5, either fail right there or go to our first resistance. And if we look at the morning game plan notes, you can see I have 12 as S1, I have 15 as R1. And what we're going to do is we were leaning short because it had already had the blow off top on day two where it went from 19 down to 15, closed right around that area, gapping down on doing a private placement at 10.5. And so the top most likely was already in. And so if it can spike up to R1 on the open, we'll put a short there and then basically go from there. And I've marked up in detail this third chart for you to kind of show you some action points. We have 5 points where I numbered it, and I just want to go in detail if you're thinking about trading this on the short side, how to think about it. So first of all, we have that 13.5 double top in the pre-market where it's rolled over. Market opens right away, strong drive above 13.5. What we'll look at point number one, which is that 15 level. And again, where did we get 15 as R1 on our morning game plan? When it sold off on day two from 19, it supported at 15, had a bounce from there. So that becomes our first natural resistance, where people who are looking, assuming that the high is in on this stock and it's going to start to trend lower, they're going to look at 15. So right on the open, it spikes up to the high 14s, short. When it starts to roll over and come back down below $14 a share, start to scale in and cover your short. The reason why you're scaling in to cover your short is you don't know if this is going to be the beginning of a larger trend all the way back down to $11 or $10. What you know is they issued some shares at 10.5. It had trouble at 13.5 getting above there in the pre-market. And when it comes back down to that level, there's most likely going to be some bidders buying there. In fact, at point number two, I've circled it there at 13.5. When it came down, somebody was bidding for about 20,000 shares. covered most of the short position, as did many traders who were shorting this. I'm sure experienced traders, they see their bidding there, because what happens is if it stops there and people start to buy, very quickly it can move back above $14 a share. And you don't want to be in a position of weakness once it gets above 14, where more people start to chase it and push it higher. And you can see that's exactly what happened. It actually took out the opening minute high, where it spiked above 15, and that's number 3 on the chart that we're looking at right now. If you are playing this from an intraday perspective, and right now I'm talking about an intraday perspective, not what someone's thinking about from a bigger picture, trying to capture a move, a multi-day down move back down to 10 or lower. And so when number 3, it takes out the morning high, the disciplined thing to do is to have a stop from an intraday perspective above the morning high. You get stopped out. Then immediately after that stop out, you see the next 2 bars are red. It gets back below 15. You can start to work your way into a short position. And ideally, after it comes back down below 15, is it starts to move sideways in a consolidation. As short-term traders, we know when a stock moves sideways in a small consolidation, we can control our risk, because inside of that consolidation, we can use the top of the consolidation as a spot to above that area have stops if we're building up a short position, and below that consolidation to add to a position, a short position, or enter into an initial momentum short position as well. So get stopped out, then it makes a new high, gets back down below 15, start to move into a fresh new short position, and then as it starts to move sideways for 10 or 15 minutes, you can start to short in that 14.5 area with stops above 1470, 1480, protecting against it resuming its uptrend from the prior 2 days. In this case, it actually, at point number 4, it breaks to the downside, so momentum is down. And what do we want to do? We want to see what it does when it comes back down to the pre-market resistance and the morning low, the morning support, pullback support of 13.5. It comes back down to that 13.5. At that time, there was still a large bid there that had been there from the open, but it was smaller. And then what we want to see in terms of a trend forming from an intraday perspective to the downside is a smaller, shallower bounce. And so between 0.4 and 0.5 on the intraday chart, we want to see it, okay, it can bounce from 13.5. We really definitely don't want to see it above 14 again, but more ideally, sellers will step down. They were at 1460 or so during that consolidation. If we could see them step down to 1380 or even in the 1370s, and it's just a very small bounce, that can really start to form a downtrend. And in this case, we did get a very tight consolidation just above the 1350. And I'm sure more people were building, larger traders were building in their short positions and understanding if that intraday downtrend stays intact, they're going to be a position of strength if that 1350 drops. And in fact, you can see 1350 drops, it starts to hold below there. You do have one spike back above. If you did short on momentum basis below that 1350 and it gets back above, you're covering that position. But if you were trading it from an intraday swing position, meaning you were building at point number 4, and then starting to build it actually as it's getting tight in front of point number 5, you're still just holding and sitting with the position. Again, as I'm making this video, I'm not sure what it did next. Perhaps it broke down eventually and got below 13 and continued to trend to S1. Perhaps they had a retest of the high 13s. But regardless, at this point, the sellers are still in control. And from an intraday swing perspective, you're still in this trade. And that's really the way to kind of control your risk, because we've had the blow off top on day 2. Today it spiked to our R1 and failed there. And what we're looking for is once it gets below the morning low, can it come to our first support? And I think on the game plan sheet, I think we had 12 there. So there's, it's basically come off about halfway from 15 down to 13.5. That's the midpoint. And what we're looking to do is eventually get a consolidation below 1350 and continue down to S1. And if we get a weak close closer down to S1, we'll continue tomorrow to look for the sellers to make another lower high, some more lower lows, and continue that trend. So this is a low risk way. After a low float stock has gone up for a couple of days, put in a blow off top to try to capture a larger pullback from an intraday perspective. I hope this helped. We'll see you next time.